Good morning, students. Myself, Biraj Dey, faculty member of Education Sharda College, Hailakandi, and I am going to teach your subject economics. So before I proceed the discussion of subject, let me clarify one thing. There's lots of misinformation regarding the subject economics. The economics subject is very tough and the subject is not scoring. So I am requesting to all of the students to remain in the class or join the class and attend the class regularly, so that at the end of the year you can realize this is the most important subject in your stream, and as well as it is the most interesting subject you have ever learned. So I am coming to the discussion. So before I start the discussion of economics, what we are going to learn in HS first year, let me clarify another thing. So why we study economics as another subject? So economics is basically is a study of choices. It is the study of how people make choices with buying, selling, and using the things. Now, what are the things? Things, for example, goods, maybe services, maybe money, maybe resources. Now, what is goods? Goods, for example, that can be touched, that can be filled. For example, pen. So that's are going to be produced. These are goods. We can touch and feel, but but on the other hand, service is which what are the things that are the service are the things which can give other. For example, the doctor service, they are doing their best to protect ourselves. This is the service. Now, once I get clarify about the choice, then the next question comes arise. Then who makes the choices? The choice makes three agents broadly. The one is the consumer, and this businessman, and the most important, the government. Here lies the importance of studying economics. The three agents comes together in the studying of economics. Now, once I make clear about who makes the choice, now the question comes. The beginning of the choice. Who are from where the decisions begin? The decisions begin of the choice from our wants and needs. Now the question comes again, what is wants and what is needs? The needs are the things which are required for living the life. For example, food, clothes, shelter. These are the fundamental things to remain to remain in life. But on the other hand, what is wants? Wants are the things which are not required but just fulfill it is a dream of having it. For example, having a cell phone in your pocket doesn't need the necessary, but it feels okay when we have the smartphone in our pocket. So this is the needs. One is needs, another is wants. So once I clear the needs, wants, choices, then you can realize the importance of economics. The decision of making the choice of resources. As we know, the resources are not unlimited in our nature. So we have the resources are limited, and choose the resources to fulfill our needs. It's the most important question answered by the economics. So here lies the importance of studying economics. Now coming to the HS first year. Now briefly, your HS first year economics is again subdivided into two portions. This is group A and another is group B. Group A consists of microeconomics and group B consists of statistics. So microeconomics, the first chapter is introduction. In the first chapter we are going to learn the different economics given their view about the economics. Suppose Adam Smith, who is called the father of economics, what his definition, when his book is published, Alfred Marshall, Lyman Robbins, and then what is the importance of studying economics. So these are the questions we'll answer in the chapter 1. In the next chapter we are going to learn, it is consumer's equilibrium. In the consumer's equilibrium, we are going to learn the total utility, marginal utility, relationship between marginal and the total utility, then the defiance curve, what is budget line, how consumers will attain equilibrium through indifference curve analysis, through utility analysis. So these are the things we are going to learn in the chapter 2. In layman language, we are in the chapter 2 we are going to learn is, suppose you are a consumer going into the market, sacrifice your money, coming into the home with a sweet smile. So these are the things in a layman language this is the things we are going to learn in chapter 2. In the next chapter, that is demand and elasticity. In the demand and elasticity portion, we are going to learn that is what is demand, and then what are the determinants of demand, what is law of demand, what is market demand, what is individual demand. Suppose law of demand statement is if the price of the commodity increases, the demand of the particular commodity will decrease. So this is the other things remaining constant. So this is the fundamental things. In the chapter 3 we are going to learn law of demand. Then comes to the elasticity. What is elasticity? Suppose I am giving you a tight slab. What is your response? In the same way, the percentage change in increase. Suppose how much price increasing will increase, that will cause will affect the demand. Rather I say will affect the demand. That's the question of how much will answer this portion, that is elasticity. The next chapter we are going to learn the production. In the production chapter, there are different forms. Suppose there are 4 factors of production: land, labor, capital, organization. These are the things we are going to learn, and the most important is law of variable proportion. Suppose you are as a production unit, as an entrepreneur, as a producer. Suppose you have a 1 kata or 1 acre of land. When you expand your business from 1 kata to 2 kata, or from 2 labor to 4 or 6 or labor, when we transfer from short run analysis to long run analysis, this is the most important question. As a producer will answer by law of variable proportion. This is the most important question we learn from the chapter production. And the next chapter is supply and the elasticity. In the demand chapter, we are learned if the price of the commodity increases, demand of that particular commodity decreases. Other things remaining constant. Now take it to as an entrepreneur. If the price of the commodity increase, then as an entrepreneur we always fly for profit. So if the price of the commodity increases, then as a seller we are always try to maximize of profit. So we try to sell it maximizely. So there is a positive relationship between price and quantity supplied. What we are going to learn in the supply, and again the elasticity. That is how much percentage change in price will result in the quantity supplied. So these are the things we are going to learn in the elasticity, and basic numericals are also there. We will try to solve in this chapter when we detail it. And the next chapter is cost and revenue. In the cost chapter, again we are treated as an entrepreneur. There are different forms of cost. Suppose total fixed cost. Suppose labor wages, the electricity bill, the purchase of rent, the purchase of buildings. So this is basically total fixed cost 1, variable cost 1, average fixed cost, variable cost, marginal cost, average cost. So these are the terms we are going to learn in the cost. And the same way the revenue. When we sell something, we get revenue out of it. So there are concepts regarding marginal revenue, total revenue. So these are the things we are going to learn in the revenue chapter. In the next chapter, there are forms of market. Broadly there are 3 forms of market. Suppose broadly 2 markets, the perfect and imperfect. Again, imperfect market again subdivided into 3: monopoly, oligopoly, and monopolistic competition. So in the perfect competition, there are large numbers of buyers and sellers. In compared to monopoly, there are large numbers of buyers but only single seller. So these are the things we are going to learn in details when we comes in the forms of market chapter. In the last chapter we are going to learn that is price determination under perfect competition, when we are going to learn that is how wage rate is determined under perfect competitive market. So this is the group A. Broadly 10 or 11 chapters are there in the group A, microeconomics. And coming to the statistics portion, there are again 10 or 12 chapters. These are mostly numericals are there present in the statistics portion. So basically in the first chapter, in the introduction chapter, we are going to learn what is the definition of statistics, what are the limitations of statistics, what are the uses of statistics in economics, then data. There are data. What is data? That is basically information. There are different types of data: primary, secondary. What are the methods of collecting primary data? Then sensors, then sample. Then what are the methods of collecting sampling? There are different methods of samples. So these are the things we are going to learn. In the tabulation chapter, this is basically raw data, and to attract the data, we make it in tabular way. Suppose we make it a table, male and female, and then tabulate it in according to our choice. So this is basically a tabulation of raw data. So after that, after end of the tabulation, we will come the diagrammatic or graphic presentation. In this chapter, we're going to learn the bar diagram, pie diagram, line diagram. These are the things we are going to learn in the diagrammatic presentation chapter. In the next chapter, that is measures of central tendency, what we have learned in the class 9-10 exams, 9-10 classes. So that is what is mean, how to calculate mean, median, then mode, then standard deviation, most probably missing frequency are also there, and the standard deviation comes in the dispersion chapter. Dispersion, measures of certain dispersion, standard of deviation, and then there are lots of things it comes in the dispersion chapter. And the next chapter is correlation. The correlation chapter will provide you the relationship between the two variables. Suppose x is a variable and the y is a variable. So is there any relationship between the two variables? Suppose x is an income and y is in height. So is there any relationship between the height of a person and the income of that particular person? So these are the things. Broadly, there are two methods of calculating correlation. We are going to learn, that is Pearson correlation and the rank correlation. The rank again ties. So there are different formulas we are going to learn in the correlation chapter. And the last but not least, the index number. In the index number chapter, we are going to learn if the price of the potato in 1991 is 5 rupees, and what the percentage change or in 2020. So if this increase, then we conclude that the price of the potato will increase compared to this base year. So these are the things we learn. There are lots of statisticians given their formulas how to calculate the index number. This is Fisher, then Fisher index is there, past years. There are lots of index numbers formulas there. We have to calculate one by one when we start the index number chapter. So broadly, this is the crux of your HS first year economics, broadly divided into two parts. So this is my chapter. This session is all about. In the next session onwards, we are going to check on a particular chapter and learn details in it. So that's all for today's class. Hope you join in the next class. Thank you.